Welcome to Spiedel's California Minute. I'm your host, Catherine Zidane. This week we're talking about planning for California's net operating loss suspensions that go into effect in 2024. Sign up for Spiedel's quarterly tax update webinar and you'll get reliable and pertinent updates on trending tax topics. Register for the 2025 quarterly update by the end of the day on December 31st, 2024 and save 20% using discount code QTU20. You can get more information at caltax.com under webinars. Net operating loss suspensions are a temporary restriction on a taxpayer's ability to use accumulated NOLs and are often implemented when a state faces budget constraints or wants to increase short-term tax revenues. For example, California has suspended NOLs during two different time periods in the last 5 years, during the 2020 and 2021 tax years, and as we discuss here, again for the 2024 through 2026 tax years. These suspension periods vary in duration and scope and generally require taxpayers to defer their NOL deductions until after the suspension period expires. However, the underlying NOL carryforwards generally retain their full value and original expiration dates. California's SB 167, enacted in 2024, suspends NOLs for taxable years beginning on or after January 1st, 2024, and before January 1st, 2027. The suspension does not apply to businesses subject to the personal income tax if they have net business income or modified adjusted gross income of less than $1 million. This means that personal income taxpayers are subject to the suspension only if both their modified AGI and their net business income is $1 million or more. And the suspension does not apply to businesses subject to the corporation income tax if their business income subject to California taxation is less than $1 million. Business income for purposes of the $1 million threshold is defined as income from a trade or business, whether conducted by the taxpayer or a partnership or S corporation owned directly or indirectly by the taxpayer, from a rental activity, or attributable to a farming business. Modified adjusted gross income for purposes of the $1 million threshold is the taxpayer's federal AGI without regard to the NOL deduction. SB 175 authorizes the elimination of the NOL suspension during the 2025 and/or 2026 tax years if in the tax year the California Department of Finance determines that there's sufficient money in the general fund over the multi-year forecast to eliminate the limitation for that tax year, and the Annual Budget Act provides that the credit limitation will not apply during that tax year. There is a 20-year carry forward for California NOLs. For any NOL or NOL carryover disallowed as the result of the NOL suspension during the 2024 through 2026 tax years, the 20-year maximum carryover period will be extended as follows: by 1 year for NOLs incurred during the 2025 taxable year, by 2 years for NOLs incurred during the 2024 taxable year, and by 3 years for NOLs incurred prior to the 2024 taxable year. When planning for a taxpayer affected by an NOL suspension, remember that California law provides an exception to the estimated tax underpayment penalty that results when a law change retroactively increases a taxpayer's estimated tax payments. The exception applies to California law changes chaptered during the taxable year of the underpayment. This means California taxpayers are not subject to estimated tax underpayment penalties for the 2024 tax year to the extent that the underpayment results from the NOL suspension for the 2024 tax year. However, taxpayers may need to increase their estimated tax payments for the 2025 tax year to account for the NOL suspension during the 2025 tax year. Although the legislature may eliminate the 2025 NOL suspension, at this stage this is only a possibility. Taxpayers should not plan on being able to claim an NOL deduction for the 2025 tax year when calculating their estimated tax payments. California conforms to the federal NOL provisions with significant modifications, including those related to carrybacks and the carryover period. In addition, California does not conform to the 80% taxable income limitation. We cover NOLs in detail in Speidel's analysis and explanation of California taxes, the most complete and best-priced California tax guide available. And it includes periodic updates for major changes that happen during the year. You can pre-order a print or online version of the 2025 edition at caltax.com under Publications. That's all for this week. Join us next time for another episode of Speidel's California Minute.